Hey guys, Credit Shifu here, and today it's kind of a non-credit card but still finance related video. Is it better value to rent or buy your home? Okay, and there are quite strong arguments for and against, so we'll first break it down and look at the pros and cons of, say, renting and buying, and then we'll have a conclusion at the end. So first of all, let's have a look at buying a home. Now, there is research that points out that it is cheaper to buy a home and pay mortgage payments plus the property taxes, etc. The monthly payment associated with buying a home is cheaper than monthly rent in most US states. I think it's 40 out of 50 US states it's cheaper. Here's a map I'm going to show you from gobankingrate.com. Blue means it's, dark blue means it's significantly cheaper to buy. Light blue means it's a little cheaper. So you can see the whole of the Northeast United States and the Midwest, it is significantly cheaper to buy. California, it's still a little bit cheaper to buy a home. And there's only really a few states out in the Rocky Mountain area where it is cheaper or even significantly cheaper to rent. I think there's only 2 states where it's significantly cheaper to rent. And so from this, we see that it is actually cheaper. And in some cases, like in New Jersey, where I am, or in New York State, it's significantly cheaper to buy than to rent. So you could lower your monthly payment by taking the plunge and buying a home. My next point is that you are accumulating home equity if you buy. So when you're renting, you're just giving the money to the landlord, you're paying off their mortgage. When you buy, you're paying off your own mortgage. And that money, part of the money that you pay each month, so part of it will be mortgage interest, but another part of it, which becomes larger and larger as you keep going on paying your mortgage throughout the years, that part is home equity, which will stay with you. It's your share of the house, and once you've finished paying off the mortgage, the entire house is yours. Now, this doesn't mean that from then on there will be no monthly payments at all, because you will have property taxes and you will have your own maintenance of the home. So that's a pretty big advantage. And obviously when you sell the house, then you can take all that money for yourself. And that leads to my next point, which is your home may accumulate value, okay? It may increase in value. So let's say if you bought a home around 2009 where the housing market had crashed and you held onto it until now, it's definitely going to be worth a lot more than when you bought it. The housing market has increased, a huge amount since then. Obviously, if it's the other way around, you bought it now and then there's some crash in the future and it loses value and you have to sell it at that time, well, I would just tell you don't sell it at that time. But if you had to, then you would lose money. But the idea is generally in the long run, homes always increase in value. There are some tax breaks to offset the cost of owning a home. So I'll give you just a couple of them. I don't know all of them because I'm not an expert in this field, but I'll give you a couple of them. One of them is mortgage interest. That is tax deductible. For homeowners, it basically means that the money you earned that you ended up paying mortgage interest to your lender, your bank or whatever, you don't get taxed on that money. So you will get a tax rebate or whatever. Another tax break is the exemption from capital gains tax on a home that has increased in value. If when you sell the home, you use the money to buy another home either equal or greater in value, you do not need to pay capital gains tax on that money, on the amount that it had appreciated in value. And now this is really great. It means that you can basically climb the housing ladder, keep upsizing, buying larger homes until sometime in the future, perhaps once you are older, when you've probably paid off your whole mortgage and you finally want to downsize. If you buy a smaller home, you will then have to pay capital gains tax on that money, but it basically offsets capital gains tax to sometime in the future. And of course, if you take that to the grave with you, they take that home to the grave with you, it'll be up to your children who inherit your home, and perhaps they sell it, and then capital gains tax would have to be paid on. And my final point about buying is for if you are a first-time home buyer, and this is going to be in relation to the US. Maybe there are schemes like this in other countries, I'm not sure. But anyway, if you're a first-time home buyer, you can qualify for an FHA loan. FHA is a Federal Housing Association, I think. It's under the HUD, the Housing and Urban Development Department, which is headed by Ben Carson.
The fruit salad of their life is what I would look at.
What a great guy. And basically, if you are are eligible for that, which you are if you're a first-time home buyer, you can put down as little as 3.5% as a down payment for a home. Okay, so normally you'd have to pay 20%, and this is letting you put down 3.5. That's if your credit is reasonably good. So if your credit is over 580, you could qualify for as low as 3.5%. If you have lower credit, 500 to 579, you still qualify actually for these FHA loans, but you have to put about 10% down as a down payment. So basically these loans are for people who either don't have good credit or have very little capital. So, if you're buying a $100,000 home or a $200,000 home, let's say $200,000 home, and you're putting down 3.5%, that's only $7,000 you've got to cough up. If you are putting down 20% on a $200,000 home, which is what you'd normally have to do, it's $40,000. So that's a huge difference. And, for some people, if you have to put down that little, then it makes sense to buy because, buying is cheaper than renting in most states, especially the Northeast. And so you can buy, you have a cheaper monthly payment, and you have this accumulating home equity. The one downside of the FHA system is that you have to buy mortgage insurance, which will cost you maybe $100 or $200 extra a month. So in some states, perhaps it will tip you over, make it more expensive than renting. In some states, though, probably in New York, New Jersey, where it's a lot cheaper to buy than rent, I don't think, even with the added mortgage insurance, probably in many cases it'll still be cheaper. You'll still have a lower monthly payment if you buy. Right, let's now look at some of the pros for renting, the argument for renting. One big thing about renting is you have the freedom to move, okay? You have the freedom to move whenever you want, and that's a really huge thing. So since I came to the US about 6.5 years ago, I have moved 5 times, okay? I was in Brooklyn, Manhattan, the Bronx, terrible place to live, I wouldn't recommend it, Queens, and finally over to Jersey, okay? 5 times. If I had owned each place, I would never have been able to do that, live in a place for a year and then sell it. And sometimes selling a house or selling an apartment can take 6 months, and there's a lot of legal fees. There are fees of several $1,000s associated with buying or selling. You got to get home inspectors to inspect the place. There's some lawyers and stuff. So it's definitely not an easy thing to sell. It would be a lot of hassle. You never could have done 5 moves in 6.5 years if you owned each place. And also if you want to move for financial reasons, like let's say the economy isn't doing too well, you're not getting much work, you're not earning as much money, and you want to decrease your monthly payments, and you think, well, I'm renting quite a big place, I'm going to downsize, and maybe downsize for a few years. You have the freedom to do that if you're renting, and you can downsize, lower your monthly payment by maybe $500, something like that. So that's another great thing about renting. Another point about renting is that you do not need to pay for maintenance. Normally the landlord handles the maintenance. So me, I'm renting right now. I can just go to my landlord and be like, hey, the dishwasher's broken. In fact, I did do that. I told them the dishwasher's broken, which it was. And they actually bought a new dishwasher, which cost several $100s. But it was in the lease that the apartment comes with a dishwasher, and so they did it, no questions asked, and had it installed, and they paid for all that. And obviously also if something breaks, like there's no hot water or anything like that, obviously I have to change the light bulbs myself, but anything that's to the problem with the house, the landlord generally sorts it out in renting. So it's hassle-free as well, and free of those unexpected costs. Now my next point is that there is an opportunity cost when you buy that you don't have when you rent. Okay, so when you buy, you need to part with, let's say you're not using the FHA loan, right? You're using a regular loan which needs 20% regular mortgage, and let's say it's a $200,000 house, so you're putting down $40,000, okay? There's an opportunity cost for that money. Would it be better spent somewhere else? So let's say that sometime in 2016 you decide to buy a house and you put down $40,000. Alternatively, if you were renting, you could have put that $40,000 into the stock market, and that was, let's say you're before the election, then the election happens, you have the Trump rally towards the end of 2016, and then all through 2017, the Dow, I think it hit record highs 75 times or more, probably 76 now actually, because it's a high today too, and it's almost at 26,000 now. So in the 3 years from 2016 to 2018, the S&P 500 has gained 37%. That's huge. Okay, so if you put 40,000 in, you would probably be about, I think it's you're like almost $15,000 better off. And that's not including, you know, the dividends that those shares are going to continue paying over time, or if you reinvested the dividends. You're looking at, you know, some serious growth if you put $40,000 in 3 years ago and held it all the way up until now in, you know, stocks, ETFs, etc., diversified portfolio. So that's called opportunity cost. And my final point about renting, about the advantages of it, which is more geared towards people renting apartments, which can typically be either condominiums, or co-ops. These have their own little sort of fees and regulations. You've got HOA fees, or like housing association fees. Sometimes these can be huge. They can be as much as rent in certain places. Some buildings in New York City, the housing fee is maybe $800 a month. It's quite a lot, right? Especially if the building has a doorman, or, you know, if it has an elevator or a pool. Those fees, when you rent, are included in your rent, but when you buy, you're going to have those fees, and on top of that, you're going to have your mortgage and stuff. So that's definitely something that you want to think about, depending on the building. If you're buying in a luxurious building, your housing association fee is going to be higher, and if you rent, you don't have to think about that kind of thing. It's just incorporated into the rent. So what's my verdict on all this? Well, you know, I'm renting at the moment. I am planning to buy, but I'm glad that I haven't bought over the last few years, because, you know, I've moved around a lot. And finally, we're probably thinking that we will settle in the northeast of the United States, reasonably close to New York City, probably not in the city, but close. And so we're finally thinking, okay, it's worth it to buy, right? And that's kind of the advice I would say to people, is that, like, if you haven't decided where you want to live yet, don't buy, okay? In the US, don't waste your chance with the FHA loan, where you only have to put down 3.5% and buy someplace where you're going to have to sell it a few years later because you decided you don't actually want to settle there. And then you miss out on that the second time, because the FHA loan is only for first-time home buyers. If you want to buy next time, you have to put down 20%, okay? So that's, you know, that's really, really crucial, okay? The FHA loan thing is such a good deal. Don't waste it on buying a place that you're just going to want to sell a few years later, and then, you know, you don't get another chance with that. So renting is great for young people. I would say, you know, if you just finished university, finished college, you're in your first job, I wouldn't even think about buying yet. Don't think about buying until you want to settle down somewhere. Also, I would give a word of caution when thinking about buying apartments, because they do have, you know, the housing association fees, and then in addition to that, with co-ops and stuff, sometimes there's like a board of residents, and they have to decide whether you're fit to buy the apartment. You know, they'll look at your financial records and everything, and also to sell, the board will have to decide whether the person you want to sell it to, or the person who wants to buy it, is fit to buy it. So you may have obstacles with selling it if you're buying in a co-op, or, you know, that kind of apartment building. So you really got to do your research on that if you're looking at buying an apartment. Personally, I would only buy a single family home or a double family home where you own the entire house, the entire building, rather than buying a piece of someone else's apartment building, okay, if that makes sense. Because then you've got to deal with like a board and a management, and, you know, you don't want to deal with that. But I would suggest that everyone should be thinking of getting on the housing ladder eventually, at a time when it's convenient for them, they have sufficient capital, they're not missing out on huge opportunity cost, and they've decided that they really do want to live in that area permanently. Okay guys, I hope that has really helped with the question of buying versus renting. Obviously a lot of the information was specific to the United States. I think a lot of countries do have schemes similar to like the FHA loan thing that we mentioned, the mortgage interest deductions, etc. You'd have to research what they have in your country. Certainly a lot of places in Europe I know will have similar stuff. And so it's up to you to just check that out, do the research, etc. If you like this video, please give it a like, hit that thumbs up button, subscribe to our channel if you are new. We cover credit cards, travel reviews, finance stuff, investing, real estate, all that kind of stuff. So, you know, subscribe if you're into that, and we will see you next time. Thanks guys, bye-bye.